Hi again everyone, I hope you're all having a great weekend. So this week another stock which has perhaps entered into the vision of those active in the market is Offerpad, which goes by the ticker symbol OPAD or Opad. This company excites me a little as their core business is property flipping, which they are bringing a technological approach to while in the process looking to corner a wide market through their diversity of services. It is exciting and it is an already profitable business despite only going public earlier this month following its merger with SPAC company Supernova Partners Acquisition Company, which can also be abbreviated with the term SPAC. This week the company was targeted for a small but temporary meme stock rally, partly driven by the stock being targeted for a short squeeze. The company is a unique online offering and has huge growth potential and surprisingly is already posting profits. And then when you add in the fact that they are in real estate, my first investing love, perhaps you can see why I am a little bit excited to look into this company a bit more. However, from some of my preliminary research, I think there should be an air of caution around the stock as it is perhaps not as rosy as many people may think. So in this video, I want to have a look at the company and have a brief discussion around its most recent rally, which saw the stock at least momentarily double in value, while also flagging a detail which I think might be escaping quite a few people looking into this stock. So let's get into it. Now, I don't want to spend too much time going through what the company does, but I do want to highlight a few features about their offering. Opad are setting themselves up to offer a range of services related to house transactions to do with buying and selling, as this is their core business in flipping homes. Their platform allows them to cut out real estate servicing fees, which can help to either boost the attractiveness of their services by passing on savings to vendors and prospective purchasers, or be used to increase their gross profit margins. The company currently already offers a few ancillary services such as title transfer, financing and moving services. Plus they have flagged a number of other services that they can offer as add-ons or future services for their business. So they really are setting themselves up to corner the market, which I really like. Offerpad are also bringing in a unifying brand to deliver business strength through consolidating a fragmented market. However, I think one of the hurdles the company faces is that they are dealing with the biggest asset class and what many consider to be the biggest asset they ever purchase or own, i.e. their home. So I think the company potentially faces a not so smooth road of winning over a large number of individual customers or clients to trust major property transactions to be dealt with via an app, and especially when that app is trying to buy the property off you. Most people only do a handful of real estate transactions in their lives, so trusting a cloud-based service to give you the best price and buy the property off them is perhaps the most difficult hurdle the company will face in trying to achieve widespread growth. I don't see them having such difficulties with the sale of properties as they will be fulfilling the role of a traditional real estate agent in that space. But who knows, the values of individuals are constantly changing and I'm sure that this is something that Offerpad is really banking on occurring. Now, it's the company growth where I think there is a lot of potential for the company. Just over the next couple of years, they are hoping to move their services into 48 markets, so more than doubling than the current 21 they already serve. This, I suppose, is the power associated with being a cloud-based platform. The company is also expecting a huge boost in revenue in that same period, but this is a figure that you do need to be careful with because property transactions are such large transactions. The dollar figures can really make people's eyes water, but just because they have high revenue doesn't necessarily mean they have high profit margins. However, it is also worth pointing out that the company has warned that they are expecting to move back into a period of losses in the near future, much of which I think is going to be associated with the cost of expanding as well as going public. So don't get caught up in the honey trap of these high revenue projections. Anyway, moving on to the company's most recent financial results, I think we come to a point which might be going over the heads of a fair few would-be investors, especially those who might have jumped in on the back of a potential short squeeze, thinking that they're getting a real good bargain with this stock. So there has been a lot of attention being given to the stock on the grounds that the company is already profitable and has huge growth potential. And if you go on their website and look at the most recent highlights and their most recent financial statements, you can see some of the highlights. Perhaps what is the most impressive for me is the number of transactions the business is doing, having acquired 2,025 homes, up from 460 for the same quarter last year, which does represent quite impressive growth. However, the one highlight which I think catches a lot of people's eyes is this one here, where it says fully diluted earnings per share were 31 cents, making the most profitable quarter in company history. Now, when you consider that the current Opad share price is $13.63, earning 31 cents per quarter is mighty impressive. If they manage to do that every quarter, you would expect annual earnings of $1.24 per share for the year. Add in the 13 times revenue growth they are expecting over the next 2 years. This makes the share look like an absolute bargain with this kind of earnings potential. And you can confirm this by looking in the most recent financial records. The company had a net income of $9,190,000 in quarter 2. And then you divide that by the 29,796,000 shares, you would get your net income per share of 31 cents. How good is that? Well, not as good as you may think. So these records are accurate, however they are based on the company's issued shares before the company went public, which occurred on the 2nd of September if I am recalling correctly. Since listing, however, the company now actually has over 223 million shares, an almost 10 times increase on the 29 million they had in their pre-public state. So I think this is something that a lot of people who are getting excited about the stock may be missing. So if you take their June quarter net income or profit, depending on what part of the world you live in, of $9,190,000 and divide it by the actual current number of outstanding shares of 223,530,000, the earnings per share based on the floated share count actually only equates to a touch over 4 cents per share, which is a lot less than the earnings per share listed for the June quarter of 31 cents. So I think it is important to be clear on this information. The company has a fair bit of promise in terms of how big it can get, and it did post a profit. However, I think investors need to be careful when looking at the numbers at this stage, especially given the fact that there is not a lot of data out since the company went public. In fact, there's almost nothing, as it's only been public for a little bit over 2 weeks. So this leads me to the interesting trading week that Offerpad had this week. As you can see, during Thursday's trade, there was a sharp and strongly supported rally, which saw the stock up by as much as 58% on the day. A lot of sources were attributing this to two catalysts, the first being a short squeeze effort, and the other factor that the company had been approved for a new $300 million credit facility. I actually think that a number, not all, but a number of retail investors may have jumped in on this stock after seeing those June earnings per share figures and hearing the rumors of a short squeeze, with the thought that, well, if the stock falls, it is at least a profitable company to be left holding on to. However, now I think we have articulated the reality of those earnings per share being really more like 4 cents per share rather than the 31 cents stated on their website. It is worth pointing out that that is an earnings figure which is likely to fall back into the red in the coming quarters due to costs associated with their aggressive expansion plans and probably a little bit for the fact that they've gone public. I hope this helps players of the short squeeze to make slightly more informed decisions on whether or not to participate in the short squeeze or not, as well as be informative for potential longer term investors of Opad. So on to some final thoughts. I'm personally quite interested in this stock as a potential longer term investment. And if I do make a decision on whether to invest in it or not in the coming days, if there is potential for a short squeeze and the price seems right, I may throw in a pair of diamond hands into the mix. But at this stage, I'm planning to review the stock a little more. I'm actually more curious to see how the company goes at growing in their existing markets rather than the number of markets they are talking about expanding into, as this will give a better indication of how much of a foothold the company can potentially establish in a market. Anyway, let me know what you guys think about the stock in the comments below. This one is new to me and I want to uncover some more about it. Also, let me know if you'd like to see me put out a couple more videos on the stock. Until next time, may the markets trade in your favor. Cheers.